Welcome back and welcome to all those of you who are tuning in live to Buy Now, Sell Now on our various social media platforms. We are going to take all of your queries, so be patient and we'll try and answer as many as possible. The first one coming in from YouTube is from Nino Kurvilla, and it's a long-term query. Is it prudent to hold advanced enzyme for the long term, bought at levels of 230 and booked some profit at 350? Ashish, coming to you on this one, since it's a long-term query. On the fundamentals, would you say it makes sense to hold advanced enzyme?
Yes, it makes sense to hold advanced enzyme. First of all, they are this is a company which is quite unique, and you don't have too much competition in this space from other players. And the kind of products that they make is something like they are having monopoly in the market. So I'm always of the view that if your businesses are like that, where you command pricing, power, at the same time, this company is almost very low leverage also. So my suggestion will be to continue to hold, and if you are already having long-term view, so you may get very good returns. In fact, you have bought at very attractive price also. So my suggestion will be to remain invested.
All right. Moving on to our next query, and this is coming in from Sameer Gupta from Coimbatore. He's saying that he's bought 15 shares of Karnataka Bank at 66 rupees per share. He wants to know, he's actually rather saying, please share the 1 to 2 year horizon for this particular account. Kunal, I come first to you. How is Karnataka Bank looking like on the charts? Are the charts looking worth maintaining the holding in this particular stock?
Well, I think it's prudent enough to shift to a large cap name. Karnataka Bank, even though the stock has recovered and doubled from the March 2020 lows, but it's still way off from its all-time high levels of 170, 175 odd. So I think in terms of that, it's not been one of the strongest performer in the banking stocks. So I would suggest that you should make a switch and go back to I think the traditional names like ICICI Bank or maybe an HDFC Bank. These stocks have already gone through a 15 to 20% correction from their 1 month, 2 month highs. So they are also available not at a premium, but they are available at a significant discount from its immediate high. So I think the risk reward as well is very attractive. I would suggest a switch from Karnataka Bank to something like ICICI Bank or maybe HDFC Bank.
All right, HDFC Bank results, of course, over the weekend, so do stay tuned for that. Let's take the next one. This one, Ashish, is a bit of a generic question, and I think you can then, therefore, hit the ball out of the park. Rahul's got a question for you. He's looking for the next 5 years. Which, according to you, is the best stock to invest in?
As you mentioned, any sectoral preference or is sector agnostic?
No, he hasn't. So that's what I said. It's completely open. You can hit the ball out of the park.
Okay. So I think for next 5 years, if you are having that long time frame, it's good to make a portfolio of 2-3 stocks. So I'll suggest one large cap stock, one mid cap, and one small cap stock. So portfolio is balanced. So my large cap pick is going to be Tata Steel. In my view, Tata Steel has great fortune for next 5 years. The way steel prices are moved up, they have reduced their debt quite a bit. At the same time, there's quite a bit visibility in that next 3 to 5 rupees, at least for Tata Steel in next 5 years. In mid cap, again, as I mentioned, Coforge is a stock I'm very, very bullish. This is a stock which has potential to even touch 6,000 rupees by virtue of their presence in very strong presence in BFSI segment and the kind of management now they are having. So Coforge can be looked at from that perspective. And a small cap idea, I like to go for Prism Cement. In my view, cement is again a sector which will do really very well in next 3 to 5 years in India. And this is again a stock which can touch 300 mark if you can remain invested for 3 to 5 years.
All right, moving on, we've got another viewer query, and this viewer query is coming in from Iiket Gandhi. He's saying that he subscribed for IRFC IPO with 575 shares at 26 rupees per share. He wants to know what should he do with this particular holding at this point in time. Kunal, I'll come first to you about this. IRFC recent listing definitely is off those price that Aniket has bought. So what should he do with this particular counter? How are the charts looking, if in case you can speak about IRFC's chart, considering that it's a recently listed company?
No, Cheryl, I won't be able to comment. It's a very, very recent listing, just 1 month of price patterns in terms of history, and whatever the price has been showing in the last 1 month, it's still quite bearish. So a bit premature for me to comment on the stock.
All right, then Ashish, I'll take this question to you then. How does IRFC look like? What should Aniket do? Does it make sense to hold on to this particular counter fundamentally?
See, this is again an IPO where not too good a response was there, and after I was listing also, we have seen continuous pressure coming in this particular stock because the kind of concentration they are having towards the railway business. There's something like now investors are shying away from. So my suggestion will be to exit from this stock and look at some of the other stock, particularly you can buy an IT or pharma where you can get better returns. So why don't you look at buying Kedila Pharma if you want to switch your position in Pharma Pack, or in IT, like we are mentioning Coforge again and again. Look at Coforge. At least you will recover your whatever the losses are there in next 6 months time, because I'm not too bullish on IRFC future prospects in short term.
All right, let's take the next one. You've got a short-term query, and coming to you for this one, Kunal. SBI Cards is the question. For 3 months, bought at a level of 920, stock currently trading around 888, so losing some ground. Sricharan can hold on for 3 months. Should he do so?
I think he should hold on to it. It's a stock which is going into more of a repair mode, mean reversion mode for itself. 3 months the stock has ebbed off some 25-30% from 1100, 1110 to 880, 888, where it's currently trading. So it's going into that mean reversion mode. The structure of the stock has been quite strong and phenomenal. Support wise, 850 is a good support for SBI Card. So I think if you're looking to average out further and then probably wanting to increase the holdings, I think closer to 850 levels is where I would suggest you to average and hold on.
All right, next query is coming in from Shekhar. And hi Shekhar, we are also very happy to connect with all of our viewers via YouTube. But I'll take his query, and he's saying that he's bought Dr. Reddy's at 4,800 rupees per share a week ago. He wants to know what's the next target in a medium term. Kunal, I'll come first to you on this. Dr. Reddy's, given that a lot of news flow supporting this particular counter, but how does the stock look on the chart? What's the medium term target, if you could tell our viewer?
So I think from a medium-term view, if the pharma stocks and the rally of the pharma stocks continues, or rather look at it this way, the market volatility continues, then possibly the markets can make one more round of shift and tilt towards the pharma names. And if that's the case, then probability of Dr. Reddy hitting back to that 5,400, 5,500 mark should be a possible trade. But it's now a catch of time frame. So whether it'll take 1 month, whether it takes another 3 to 6 months, it all depends on the kind of the events, the news flow, as well as the market volatility which shapes up over the near term. So I would believe that if you have a time horizon of at least 3 months to 6 months, then I believe a possible targets of 5,400, 5,500 on Dr. Reddy should be a decent enough target.
Wow, significant upside seen there on Dr. Reddy's. Let's go to a long-term query, and Raghu unfortunately is losing some ground, Ashish, in the investment that he made in Coal India, as much as 40%. In fact, if I'm not mistaken, this was the worst performer on the Nifty 50 in FY21. What are the prospects? Should Raghu look at switching his investment perhaps into something that has better prospects?
Coal India, I'm not also very bullish as such. Again, the reason is output of coal mining is again dropping. At the same time, a lot of now power projects and new projects are shifting to renewables and other source of energy like natural gas, etc. So this is the reason we have seen a continuous fall from 160 levels to almost 110 levels in Coal India, and again it is stagnant at those levels. So my suggestion will be to exit from Coal India at this price because not too much upside is there in particular this particular stock.
All right, our next query is coming from Swaminathan Sundaresan. He's saying, is it worth investing in Indian Energy Exchange at the current levels? Kunal, Indian Energy Exchange in the last 52 weeks has seen a solid run-up, but does it make sense to enter this particular counter at this juncture?
So I think it's I think it's a stock which has done reasonably well off late. Last 12 months have been phenomenal. 12, 13 months have been phenomenal for the stock, from being a level of 125 to 375. So it's already gone to 3x mode. And the structure is improved just off late. When you look at the monthly charts, it's just that the last 3 months, the pace of rally has picked up much higher for IEX or Indian Energy Exchange in that sense. So I think it's a good stock to really bet on from a longer term view. But then the strategy has to be a bit tweaked. I would suggest that have a buy on dips kind of a strategy. The stock has this habit of going into periodic consolidations after every bout of rally. So if you can take opportunity of that consolidation and then look to buy lower, look to average it lower, then I think it's a much more better strategy, specifically if you're holding on to it from a longer term view.
We've addressed this yet. Of course, buyback was announced for Infosys, and the question, Ashish, is on Infosys. KK is asking this. Is it worthwhile buying Infosys now at current price of 1,350 for buyback gains? And what kind of acceptance ratio is expected? Would you be able to comment on something like that?
No, I think there's an open market kind of purchases what they are going to do. So from perspective of buyback, it doesn't make sense to buy now. But if it correct from here, approximately 50 to 75 rupees for buyback as well as from long-term holding, you can surely take an entry now in the stock. But let it correct more. After that, we'll make a viewpoint.
All right, a query coming in from Rajeshwari Tumuleru. She's saying that she's bought Zensar Tech at 275 rupees per share. Wants to know 3 to 6 month view for this particular counter. Kunal, we spoke about mid-cap IT sector earlier in the show. This one also had seen a very good rally in the last 1 year. What's the charts look? How are the charts looking for this particular counter?
So again, I think an interesting stock which has done pretty well in the last 12 months, moving up to almost 3x, 3.5x in that kind of a time frame. But the bigger catch with such kind of names is the liquidity. Now, for example, on a day like today, where the IT stocks are doing pretty well, specifically the mid cap names, the average trading volume for the stock is just 55,000, which is a very nominal and an average kind of a trading volume as compared to the other peers in the same category on the mid cap side of the IT pack. So I think that's the bigger catch, because such kind of a low liquidity in terms of volumes could probably play a bit tricky when the stock actually goes into any kind of a correction. But nevertheless, I think because of the recent history, the way the stock has rallied and the sector which has done exceedingly well, I would suggest that you can look to park some investments over here. I think the stock is at 260 to 65 levels, which is also a decent support for the stock price. So you can start entering at current levels and look to add on dips. But again, the catch over here is low liquid. So ensure that you don't park too much of the corpus on just one single stock.
All right, interesting query coming in from Santi next. View on Apex Frozen Foods is sought for the long term. Ashish, therefore, I'm coming to you. Bought at levels of 203, so more or less at cost price right now. Should they hold on? There are problems with regard to the supply chain, but I believe that the volumes that recently were announced were better than expected. What's the view on this counter?
See, as far as their financials are concerned, last 2 quarters we were not that good. Last quarter was just only 2 crore kind of profit for them. And again, as you rightly said, supply chain related issues and all those things are there. But only one good thing is that the stock is still available at 20% plus from the 52-week low, and we have seen a high of almost 330 in the stock. So if you are really having long-term horizon, then you can buy and hold this stock. Or you have already bought, then you can continue to remain invested and just wait for this quarterly numbers. If because I'm expecting at least some turnaround should be there in this quarterly numbers. If it doesn't happen, then surely exit from this stock. So just wait for this quarterly numbers.
All right, Ashish, I'll come to you with this next query. It's from Wayne DeMello. He's asking your thoughts on the cement sector for the next 6 to 8 months. We know cement sector has been seeing good momentum, good traction coming in that particular sector as well. There have been price rise as well. So what's your view on the entire cement sector coming in for the next 6 to 8 months?
See, 6 to 8 months is slightly tricky in cement sector now. Last week it was looking quite okay when all these companies have increased the prices. But the way now lockdowns are being implemented in Maharashtra, and it will be followed by other states also wherever the situation deteriorates due to COVID, the construction activity has to take some halt or take some backseat. This is the reason for last couple of days we have seen sale off in cement stock, and in my view some more selling is going to continue in cement pack. So my suggestion will be to wait for a few more days and just see how this COVID situation takes shape, and post that we can look at the stocks like Ultratech Cement and Shri Cement and large cap to make an entry, because they have corrected quite a bit from highs.
Right. Gentlemen, if we can keep the answers a little short, we'll be able to slip in 2 more. The first one is from Badri Rajan. He's holding 100 Tata Motors DVR shares at a level of 126, Ashish. Should he hold on to this investment? We've seen signs of JLR improving with sales.
Exactly. So I'll suggest to remain invested in Tata Motors DVR as such, and I think the stock has already hit the bottom, and from here, whatever you are going to see, you will see good gains. So my suggestion will be to remain invested in Tata Motors DVR.
Okay, and the second question is from Puneet Nanda. This one's for you, Kunal. Sterlite Technologies for the short term, that is 6 to 12 months. Would you suggest a fresh entry?
Not really. I think the stock is still yet to hit a support level. I think if it hits back towards the 200 mark or slightly lower than that, 196, 197 to be precise, then I think it becomes a good contrarian zone to enter into the stock. So long-term, medium-term trends attractive, but short-term wise, maybe a better risk reward could arise if the stock drops below that 200 mark.
All right. Thank you, Kunal, as well as Ashish, for joining in and resolving so many of your viewer queries. And all the viewers who've logged in, don't worry, we will definitely address your queries in the next episode. But definitely write on to us and stay tuned to ET Now, and log in tomorrow also at 11:20 a.m. where we'll take all of your queries. All right. On that note, we'll slip into a break in this edition of Buy Now Sell Now. But stay tuned, more coming on the other side of the break. Don't go anywhere.